Hey everyone, so I'm pretty wrapped up in the cannabis industry at the moment, and I'm going to go through the 5 big, what they call MSOs, which are multi-state operators. So Curaleaf, Green Thumb Industries, Trulieve, Verano, and Cresco Labs. And I'm going to rank them against each other in like a tier list. We'll get to that by the end of this episode. We'll start that tier list up. There's like 100 of these companies in America, and I'm going to work my way through them. I'm not going to put a video out for every individual company, but the first 5 I'm going to go through in detail just to get a good handle on the big players in the space. And from there, I think we will be able to judge some of the smaller players based on the bigger ones. So today I'm starting with the biggest of them all, which is Curaleaf. They're about a $3 billion enterprise value at the moment, time of recording, which is in late June. So a common thread that we're going to see throughout the cannabis series that I'm putting together is that growth rates have slowed quite dramatically. They're essentially flat for the last 12 months from a revenue standpoint, when they were growing like 2018, 19, 20, 21 at like triple digits, hundreds, 200% per annum they were growing, and valuations have just crashed. This whole industry has been just left for dead. Investors have been fleeing for the last 18 months. Like, we thought the tech sector got pretty hammered. Cannabis has been getting just punished. And I've kind of gone into it with a bit of an open mind, thinking that they can't all be bad. There must be some interesting nuances and dynamics going on in this space, which I've made a video about before, about why the cannabis industry I think is actually interesting to look at the moment, and why I think it's an asymmetric play from an investment point of view. Go visit that video first. That gives you the spiel on that. Today I'm looking at specifically Curaleaf. A lot of consolidation has sort of been going on as well over the last couple of years. So mergers and acquisitions playing out, big eating the small eating the big. There's been lots of things going on. And essentially all the cannabis businesses are realizing that capital is getting very difficult to get, and they've got to tighten up now. They had loose operations before, and they've got to get profitable fast because they're going to run out of money, because they can't tap into the capital markets like they used to, but they were just diluting everybody, and they can't really access capital at reasonable rates anymore. So yeah, times have definitely changed in the industry, and it's going to be the good operators that I think do the best in the short term anyway. So if we have a look on the screen at the moment, you can see the Curaleaf stock chart, and as you can see, it has been getting punished. That's not dissimilar to all the other cannabis stocks. And by the way, this stock is listed on Interactive Brokers. I use Interactive Brokers for my investing. There's a link in the description below for that, and I highly recommend, if you are looking at any OTC stocks, Interactive Brokers will give you access to that. I think a lot of the other brokers, Robinhoods and things like that, won't give you access to OTC. So I highly recommend Interactive Brokers for that, for the cannabis industry as a whole. It doesn't have every individual OTC stock, some of the really small ones, which frustratingly, they don't have them, but all the bigger ones, anything that was at any stage over like 50 million in enterprise value, I think they have those. Any of the little tiny ones they don't have, but majority of the companies that we're going to be looking at are going to be in Interactive Brokers. Now, Curaleaf specifically are in the consumer cannabis, like retail business, like an MSO, as I explained earlier, multi-state operator. They're the biggest. The potential tailwinds that are coming are like safe banking laws, which means that at the moment, all the cannabis companies in their retail stores have to just handle cash. You can't pay with credit card, which means that there's all this cash on site. So there's a lot of security issues with that for workers coming in and out. There's obviously issues with getting mugged and robbed in the stores, and all this cash. It's a cash business, and that's like physical cash. It's because they can't bank, like they can't use the banking system, and that's nuts. So they need some reform there, and that hasn't happened yet. But when that does, that will really help open up the world of cannabis trade anyway. There's obviously legalization across from federal laws, state laws, and then there's the big one, which is any sort of tax breaks. There's the thing called the 280E. If they can remove this, it essentially means that cannabis is considered an illegal drug, a Schedule 1 drug, which means it's an illegal business they're operating, and therefore they can't write off any of their expenses as part of the business. So you're getting taxed on their gross profit, which is brutal. That is very unfair compared to any other business, but then again, it's cannabis. So I kind of get why, but this will make a huge difference if they can ever normalize this and get rid of this 280E, which probably will happen at some point. Especially if legalization happens, this will happen as well. So it's just a matter of time. In the meantime, these businesses are finding it very difficult to make any money. But with that 280E removal, they're all going to be flush with cash. That's there's a big play here on just this 280E removal. All right, let me go into a bit more like the micro details of Curaleaf in particular. They've actually been pulling stores. They've been unprofitable in a few states, California, Colorado, Oregon, the big competitive states. They just can't, they're not profitable in these competitive markets. The supply dynamics there have crushed many players in the industry in these states. Now, Curaleaf are operating in 18 states. They've got 152 stores in total. Their biggest being in Florida with 60. They're not the biggest player in Florida. They're actually only number 4, with Trulieve, Verano, and Air Wellness being the bigger players in Florida. And they have quite a presence in Pennsylvania, Illinois, which is capped at you're only allowed to have 10 stores per company. Arizona, they also have 16. So they're spread across a handful of states there, 18 in total, which is the most sort of spread. But some of them have only got like one in, what's this? Arkansas, probably. AR. I don't know if AR is Arkansas. I'm going to guess. Anyway, they got one there, for example. Now, something unique about Curaleaf is they've actually got quite an international presence, in particular Germany, and Germany's quite an exciting place. There's a big market to serve there. It's different rules and regulations over there, but for them to have international expanding options, I think is quite interesting. It's definitely interesting compared to all the others that don't have this international presence. So there's something in Curaleaf's potential favor, or could be a distraction. Depends how you look at it. Now, according to their webcast from the first quarter 2023, they said that price pressures are a concern, and management addressed that. Well, they addressed it, but I think it's code for that they don't have pricing power and that competition is tough. That's essentially what they wanted to say. And I believe some businesses actually enjoy lower prices because it flushes out the weaker players in the market. So Curaleaf have declared that they are a weaker player in Colorado, California, and Oregon and have left. They've left to obviously try to reinforce other markets where they have better margins and better dynamics, but it's a sign that they're not the best operator going around. Like I said, I'm okay with them getting out of bad performing areas. It's logical. I can't blame them. It's definitely the right thing to do. You need to save some money and try to get free cash flow positive as soon as they can. They're also going to close their New Jersey cultivating facility, which was notorious for growing pretty crappy weed. It was moldy, it was poor, it was inconsistent. So probably a good thing that they're closing up there, get a better operator, someone who knows what they're doing to use that facility. Essentially, this tells me that Curaleaf don't have a handle on the nuances of cultivation, and therefore I worry that their product is going to be inconsistent. And for a business that's focused on growing a brand and a retail presence, I think this is actually a terrible sign and a really big red flag. Think about beer, for example. Like, imagine if you were to get a beer in Australia, 4X or Tui's, or I'm not familiar with all the beer brands, but imagine opening it up and getting something different each time. Like, sometimes they were off, sometimes they tasted sweet, sometimes they were bitter. Like, if you've got inconsistency, you would never really trust that brand. You would not have much brand loyalty to that because you don't have any consistency. And I think consistency is really important with any branded product. And if Curaleaf can't have consistency, I don't think they've got anything. So I think there's a big fear here that they don't know what they're doing. I don't think they have any competitive advantage. Maybe being a first mover and having scale is a competitive advantage, but I don't see anything interesting about this one. I think that first mover advantage has actually got them somewhere early, but now the markets that they're in are maturing. I don't think they stand for anything, and they're not doing anything particularly well. They pulled out of the states as they couldn't handle the competition. What does that tell you about the business? Well, it just tells me they have no real competitive advantage. And I think they have a muddled view on what their plan is for the business. I think they were just chasing market share probably and weren't strategic about what they were doing. They weren't doing things step by step. They were just burning cash, growing for the sake of growth. Yeah, lots of CapEx spending going on. And I don't think they can just keep shutting up shops in some areas. They have to actually win somewhere. They have to stand up and win a particular market or do something particularly well to be different to everybody else, win a consumer over, be the best store, be the best in a particular state, do something. Otherwise, just better operated businesses are just going to come in and outcompete them. And then what about all of these like impairment charges that are going to uncover as they start to see, like they've got $1.8 billion of intangibles on their balance sheet. And I think it's probably lucky if that's worth half of that. Time's going to tell, as it could go two ways, either that they could write down the huge losses of the intangible assets and their assets go down a lot, or maybe some of these reforms come in and the cycle turns and money starts flowing back into the space, and their intangibles actually become as valuable as they think they are. I think they overpaid and overvalued the assets personally. That's my gut feel. But in saying that, like I said, they could do really well. Like, a rising tide is going to rise all the ships. Any of those reforms that go through could bring everybody up here. And that's, I guess, the hope for Curaleaf. I just don't think they are a great business. I don't even think they're a good business. They said on their earnings call that they're going to focus on inventory management, better genetics. So they're both good things. Inventory management for cost cutting, better genetics for consistency. They're also spending a lot of money on lobbying politicians trying to get these reforms to go through. So maybe that's money well spent, but I think they're wasting money there too. And they're going to focus on profitability, which is about time. They don't have much of a choice. They kind of have to focus on profitability as that growth engine has almost come to an enormous stop. If I look at some of the major metrics for this business, so their gross margins at 43% are okay. Operating margin, well, that's very bad at -1%. We haven't even factored in like tax and interest and things like that yet. Their market cap is about 2 billion, but their enterprise value is 3 billion, telling me that they've got a lot of debt. Enterprise value to EBITDA, probably not super crazy cheap. I think. Why are they unique? Well, I don't think there's anything unique about them. Their debt to equity is a little bit on the high side. I prefer anything under 0.7 is probably okay, but in cannabis, I'd probably anything under 0.5 is probably safer. But debt to EBITDA, considering their EBITDA sucks, their debt to EBITDA is at 4x, which is very high. They've got high stock-based compensation, which sucks. Salary for the CEO and the C-suite are high as well, but they do have high insider ownership, which is at least they've got some skin in the game. And that's about the only positive thing that I've seen so far in this entire business. So yeah, Curaleaf, not looking too hot here. They might be the biggest in the space, and maybe they find like the market in Germany or somewhere else to build up some operational skills and they start to dominate somewhere. They actually start to stand for something. I don't know. I'm not going to take that bet with a significant amount of debt as well. I don't imagine ever being able to buy this for less than book value, because I think even if I looked at it at a book value point of view, I think their intangibles are probably worth half of what they are. Anyway, there's things that I could go on about this for a while, but I'm going to stop now. Let me rank them on a tier list now. All right, so for all the things that I've mentioned in this video, where am I going to rank Curaleaf? Well, I'm going to put it probably in the D category here. The only thing that they have going for them, why they're not in the E category, is I think that, like I said, a rising tide could lift all the ships here. I could actually see this thing on the stock market performing actually really well, just because the whole market could turn around and the cycle change. So it's not a complete bust, I don't think. But yeah, for all those things mentioned, mostly the lack of competitive advantage, and I don't know, there's a lot of things, but I'm going to put them in the D tier for now, and I might adjust this depending on where these other businesses go. We're going to do Green Thumb next, then Trulieve, then Verano, then Cresco Labs, and put them here on this scale. Hope you're enjoying this idea and this little tier list, and I'm going to keep this going for the cannabis series. Yeah, feedback is more than welcome. Leave comments, and I'll see you in the next video.